Welcome, Bob. Good to see you. Did you hear anything in Brian's report that you disagree with?
No, not at all. And I feel the pain. These gasoline and diesel prices are enforcing the iron rule of economics that you can't consume what you're unable to produce or draw from inventory or import. And the supply side is really stretched, both at the crude oil market and the refining sectors. And so I wish I had better news. I really did. It's not a happy forecast, but these prices just have to go higher because there is no sign yet of real demand capitulation, real demand declines, and they will go higher until that happens, unfortunately.
Has there been any effect from the release of gasoline or petroleum supplies from the strategic petroleum reserves?
Not really. One could say that the release of the crude oil from the reserves made prices lower than they would have been otherwise crude. But the problem isn't so much crude anymore. Crude at $110, $113. The problem is shifting now to the refining sector. The margin between the product price, diesel and gasoline, and crude is now $50, $60 a barrel, 2 or 3x what normally it is. And so it's that refining bottleneck, which is now something that the SPR really can't address too well. And so, no, it hasn't had a big effect. Crude oil prices might have been a tad higher had it not been used, but it's not the big deal. It's refining right now.
Bob, do we need a recession in order to balance the energy markets?
I hate the word need, but you know what? Not every recession began with an oil price spike, but every, and I mean every, oil price spike led to a recession. I mean, they just are there at the scene of the crime. The price of energy keeps rising until it crushes consumption. Now, you can have, like, from 03 to 07, 08, you can have rising energy prices with a growing economy. But in the economy we're in right now, with inflationary risk, central banks withdrawing liquidity, et cetera, geopolitical risk, I'm afraid this one's not going to end well. So, yes, I'm afraid it's going to end with demand slowdowns at least, and possibly, let's hope, a mild recession.
As Brian pointed out there, not only does virtually everything that you buy out of a Target or a Walmart or a Best Buy get transported somewhere by a truck or a train or a ship that uses diesel, but an awful lot of the products themselves have petroleum products in them. So is there any way that you see consumer product inflation declining in the near term?
It can't, not without a recession, no. And that's absolutely true. Diesel, we talk about gasoline, it's what we see, it's what we pump, but diesel is really the economic fuel. It's the lifeblood of the economy, transportation, power in some cases, and so forth. So it really is embedded in economic activity, and it filters through so many goods and services. So no, I'm afraid we're going to have to march higher here. It'll affect broader consumer price inflation. Energy, in a way, is the tail kind of wagging the dog here.
All right, Bob McNally, thanks very much. We appreciate it. Always good to see you, Bob.